Hello, guys. It's DannyDealz here. Thank you for tuning in to Un Poco Mas, the show where we try to give you just a little bit more. I would like to talk with you today. It is May 2nd, 2023. It's about 8:15 out here in Los Angeles, about 11:15 out in NYC. Hope it's a good day wherever you are. I would like to talk with you about the SoFi stock, SoFi Technologies Inc., ticker symbol SOFI. As you know, earnings hit yesterday before the bell. Um, and earnings were pretty good. They were nothing, to write home about. There was some weakness, some cracks in the growth story. Overall, I would give the ER like a B minus. Um, Definitely solid given the conditions. There were some upside, some downside, and I'll talk about that briefly. But the stock has been absolutely destroyed. Was all the way up to like $6.50, and as of today, trading at about $4.90, down 10% on the day, and was down 12% yesterday. Volume has been extremely heavy. The stock is under short attack. If you remember, I made my last video. I noted that shorts had in fact dug in their heels even before earnings, and I was like, "This is a little bit strange." Normally, SoFi pops a bit after earnings and then pulls back over the next couple of weeks or months. And in this case, rather than shorts covering a bit for that pop, shorts really dug in the week before the ER. So I thought that was a little bit unusual, and sure enough, the stock came under just a massive short attack. So if we go over to Ortex, I'm going to zoom out, but if you look at the live short interest, they have borrowed 15 million shares today and returned 1 million. So the short has dug in almost 14 million shares. Live short interest is 15.57%, or 100 million shares, and that's up 3 million. Let's see what the overview brings us. It's short interest value 533 million. Estimated short of free float is over 12% now. Free float on loan is 18%. Shares on loan 144 million. Days to cover 4.3. Cost to borrow 0.89. Utilization is up 7% at 68%. Um, I think like this short attack was planned before earnings. It didn't matter. Even if earnings was a blowout, this stock was going to get destroyed. It's preordained. I've talked in previous videos about why the financial sector, the analyst houses, the major financial institutions, they all hate SoFi. They don't like the competition. They don't like the growth. And so certainly they've gone out of their way to highlight the negatives and completely ignore the positives in this ER. One analyst, this guy R. Ray Wang from Constellation Research, principal analyst and founder, good video on SoFi is the future of banking for the next generation, and he sort of lays out why SoFi is different and has a very bright future if you're willing to be patient with the stock. So I would invite you to take a look at that. God forbid, let's take a look at the 5 day here. It's about as ugly as it gets. Stock was down here $5.70. I always worry about these really steep pops that sort of come for no reason. I feel like that was smart money accumulating for this short attack and to sort of dump and just increase the selling. Stock was up at 6.25, popped to 6.5 overnight when the earnings came out. I think the stock was up like over 10%, 4 a.m. or something out here, and then it's been selling ever since. Came down to 550, popped back up to 570, and then just dumped again today, and it's been an absolute free fall down to the low 470s. So what was wrong with the ER? I guess that's a big question. The the thing people are going to tell you is this is an article out of Morningstar, but it's kind of the theme, like that SoFi, while the top line grew, the earnings per share were flat. And then the membership and product growth, while there was, good growth, it wasn't as a percentage, as good as it has been. And this is what happens as companies get a little bit bigger. The growth is not as fast as a percentage of a company as a ratio, while the, nominal growth might be, the same at like 400 and some thousand members. That's not going to be proportionally growing as fast as you were when you had less members. So, that's just the nature of the beast. That's the nature of growth. It's much harder to grow at the same rate as you get larger, because you just have to add more and more. And also, so there's a big question about loans. SoFi is generating much of its business through these personal loan generations, and when I guess there's something in SoFi's accounting that when they uh, when they generate these loans, they bake in a gain on sale margin assumption. So they assume in their accounting that they're going to sell the loan at a gain, but all through quarter one, they held all the loan on their books. Basically, the analysts are saying, or the bearish analysts are saying that this is a problem because um, this means that there's not a market to sell these loans. This means that the margin assumption that SoFi makes is actually not in the actual market for these loans anymore. And that may be the case, but if you look at SoFi's like reserve ratios, again, that we went over in the last video, perhaps it could be true that they're just making more money holding these loans on their books, because they're increasing deposits so quickly and their reserve ratios are so solid. They can afford to hold these loans and, in fact, make more loans and hold more loans. And if they might make more profit holding the loans than selling the loans. Um, I think this is just a little bit overblown. I think yes, as everyone points out, the market for unsecured consumer debt is very shaky right now with good reason. You look at, some of these auto loans, you look at what's happened with like Carvana, some of these other stocks, the buy now pay later stocks, where all this stuff's going bad. SoFi is caught up in a lot of stuff that just really doesn't apply to it, because SoFi's average borrower has a credit score over 750, and their members average like, I think, 160, $170,000 in income. So SoFi members, by and large, are going to be paying their bills. What they set aside for write downs and bad loans actually went down from the filing end of December to the filing end of March. So um, I don't think SoFi has a problem with these loans, and I don't think they're going to be difficult to sell into the market, because these are the prime customers with the top credit scores, the best jobs, and although the loans are unsecured, these are the kind of people that are going to pay their bills and not destroy their credit. So, the other criticism, basically, within the ER that you're hearing a lot about, was just that when will the student loans come back? We still don't have any clarity on that. You also had some questions about Galileo. They've integrated completely with Technesis, but their overall accounts were down slightly. That's the first time this has happened. They've always grown quarter on quarter. This time the Galileo accounts were down like 131 to 126. Noto said that this is because they are transitioning at Galileo Technesis from a lot of smaller accounts to less larger accounts, which is going to be more efficient and lead to better margins and ultimately that division making more money. But again, this is how ERs work. Like Wall Street has certain things they look for. Analysts, they don't like declines. They don't like earnings per share to be going less and less and less of a loss, and then all of a sudden 5 cent loss, you're flat from last quarter. If you have a growth story, that's not the growth story that the street wants to hear. So the ER, again, I give it a B minus. I think this sell off is just coordinated and baked in before the ER ever came out. They are shorting the bejesus out of the stock. Live short interest, again, borrowed over 15 million shares today. Um, and the short attack continues. The stock was down as much as like I don't know where were we? We're all the way down below 475, and it's come back up to 493. So there are some buyers coming back into the stock at this level, as you might have imagined. It's a fire sale at this point. You just had a pretty decent ER at worst. It was pretty decent. A lot of people say it's pretty damn good for these conditions. You had extreme, really good deposit growth, 2.7 billion growth in deposits, and really good numbers as far as direct deposit. I think 90% of the new deposits were coming from direct deposit members, and more than half of SoFi Banking and Money members sign up for direct deposit within 30 days. So that bodes very well for SoFi. They're well capitalized. They have plenty of credit. There's no liquidity issues at SoFi, but the news is the news, and the market is the market, and the trend has not been our friend. And then this short attack, just the market hates SoFi. Watch my previous videos. I explain all this. If you can find them. Again, I'm not going to link to my video. You have to do a little legwork on your own. I'm not going to make it too easy for you. It's not going to be down in the description. It's not going to be up here. I'm not going to link it here. You can easily click on my channel and find the video in about 2 seconds. So in any case, my name's DannyDealz. This is Un Poco Mas, talking about the SoFi stock, ticker symbol SOFI. Just had a pretty good earnings report come out yesterday, and of course, being SoFi, the stock has been absolutely decimated 2 days in a row by a coordinated, well-timed, well-capitalized short attack and some coincidental downgrades. One analyst from Wedbush just went from $8 to $5 on a downgrade. So cut his target on the stock about 40% based on a very thin and obtuse rationale that just didn't make a lot of sense to cut the stock quite that much after giving it about 10 buy ratings in a row. But again, this is a growth stock, so if the growth story is called into question, the stock is going to get hammered. And obviously the stock is getting hammered. So let's see where this day goes. I will try to update you on any news on SoFi. If you have any thoughts on the ER, on this absolute drubbing we're taking as SoFi investors, please share with me down in the comments. I appreciate your time. Thanks for watching. This is DannyDealz for executive producer Hurricane Lopez. This has been Un Poco Mas, where we give you just a little bit more. Have a great day.